Short video just to walk you through on my most recent gold long trade here. And what I'd like to see is how we trade in Asia. So this here is Asia the day before. Okay, now it's quite a simple trade, but it does take experience to identify the setup and to have the confidence then to enter the position. So if you look at this, what we have here, this is Asia as I've said. Okay, Asia starts from 8 p.m. Okay, and the official Asia session is 8 p.m. to 11 p.m. but I consider Asia to be all the way up to London. So that's how I kind of consider the Asia session. So what we have here is we have a low, okay, and then we have a high, okay. Now this here is the New York Open. I think that's 9 a.m. Let's just double check the timing on that. I'm pretty sure that's 9 a.m. So yep, that's 9 a.m. So that is pretty much when the New York session opens. I mean, New York officially opened at 8 a.m. but 9 a.m. is just 1 hour inside of the New York session. But what happens there is we make a new low. This New York comes in and takes out the Asia low. Okay, now that's important because now we have a low, a high, a lower low. But then we have this move up, which is a higher high. That's a breakout. Now, that is where you get breakout traders into the market. Okay, now there are a couple of things that can happen. You can have this breakout, which goes above the previous high, and that may be a failed breakout, and then you get a move down. Or you get what's happened here is you get the breakout, and the breakout is above this Asia high. You get a pullback, right? So you get a breakout, pullback, and a continuation, which is what we've had, and that's my trade. Now, I'm going to give you a couple of really easy ways to determine how you can identify this to be a breakout, pullback, and continuation. So pay close attention to what I'm saying here. You've got a low, you've got a high, you have a lower low, right? This is a lower low from that swing low in Asia, okay? Even this small little tick, it's not important how low we go. We have a lower low, just with that small move down, okay? When you have the higher high, as we have had here, you need to look at the swing high that the market has now just traded above. Okay, swing high is a high, and then, so this is the high, and then two lower highs on either end. That's what makes that a swing high. Once that's broken, which we have here, we need to see how do we trade after that. If we can remain above this up candle, the last up candle in that swing high, then that to me is support. Okay, so if I just draw a line there, you can see that has acted as support. Now maybe we can go down to the wick, right? So we can probably go down to the wick to see that level has remained as a support. So that's at that point what has got me interested in this market. Okay. Now I can enter here to go long, but the timing there isn't really right. Okay. So if I show you the timings there, that is the afternoon. Okay. So that's 2 p.m. I really don't want a long there. I'm not even awake at that time anyway to be in the market, but I have identified this from the New York end of New York session to be a breaking structure because it's now taken that break above this previous swing high, which is a high of Asia. Okay, that's important. It is a high of a session in the market, right? There's three sessions. There's Asia, there's London, and there's the New York session. And New York, which is this move up from 9 a.m. to 11 a.m., has gone above Asia high. Okay, and that's a breaking structure. Now, it needs to stay above. And we see that by the fact that this area, which is this last up close candle in that swing high in Asia, has remained as support. Okay, and that's where I'm interested in the market. So the following day, so after the New York has traded, this is all afternoon, this is 2 p.m. afternoon yesterday, this is the overnight session. And the following day, which is today, we have the Asia session open up. Okay, Asia opens up at around here, which is 8 p.m. Okay, so between 8 p.m. and 9 p.m., Asia sort of goes up, okay, but then comes down, right? In that second hour of Asia, the market comes down and basically stops out anyone that was long from the open of Asia, okay? And that's important because that is kind of what I want to see. I want to see the market make some kind of a false move down. I'm already thinking we're going to go higher because we have a low, high, lower low, higher high, and support. I'm already biased to the upside. I want to enter long, but I don't want to enter here because that's 2 p.m. and I'm trading there. Here, the New York session's finished. This is all overnight. So I want to enter somewhere here long, which is today, Asia session. I like to see this false move, which is that initial manipulation in Asia, which starts from the second hour of Asia from 9 p.m. Okay. And what I do is then I like to wait for the market to just start moving up a little bit after this false manipulation move. So what do we have here? We have false move down. We have this consolidation. Immediately, I know now I'm getting ready to go long. And I just want to see some kind of a movement in my direction and then I long, and that's my trade there. Okay. Now, I already had predetermined exits from previous analysis, but I can tell you how you can easily determine where you want to exit. I like to take my exits pretty quickly. I don't want to hang around and hold on to positions. So very simply, all I did, and as I said, I already had this line marked, but then I just laid on some additional analysis to verify where should I exit. So all I did was I just took this manipulation move down, and then I just calculated that range and just projected it up, and look where it comes in right there at my predetermined red line, and that's where I took my exit at that 23.85 or somewhere around there. So I got in around here when the market showed me a move now starting to move back up from this initial manipulation. Okay, and that was around that 23.73. I then took this down manipulation move, projected it up, and that is 23.83. And that's around the 100 pips that I like to take. Okay, and that's the trade that I journaled this morning, where I've got in at around that 23.73. Let's just open this up so we can see this. 23.72.73, as I said, around that level, and there was my red line, and I got out around that 23.83, 23.84 for that 100 pip move. Okay, and that's just how I trade. I don't make it any more complicated than that. Okay, this down move was the initial manipulation. I needed that, right? But that wasn't my only reason for entering in the trade. So you've got to take it all in, everything that I've said. The low, the high, the lower low that broke Asia lows, the higher high that then broke Asia highs, and then the support line that I had projected. Okay, and I can see that is supporting. This is New York ending at 11 a.m. yesterday, New York time. I don't want to trade in the afternoon 2 p.m. because I'm not awake, right? I live in Sydney. This is all overnight. Asia opens up around this level here, somewhere here. Okay, we see the initial Asia go down. That's the manipulation. We see the consolidation. That indicates change in direction. We see that move starting to move around. That's where I entered, exited there. Why did I exit there? I looked at this move down. I took that range and I projected that exact same range up, and I got that level there. I don't care if we keep going higher. I'm not here to get the highest high. I didn't enter at the lowest low. I entered somewhere here and exited here. I got the bulk of that move, in my opinion. I'm happy with that trade. It had a reason to be in, multiple reasons to be in. Structure break, support, timing, manipulation, consolidation, reversal, and a target that was in line with what I want out of the market. 100 pips is fine. Okay, I already have from my previous gold video this level that I marked, which is the 50% of the monthly wick from last month. Have a look at that video. It's on the channel of why I have this line. Okay, and so we are close to that, right? Does that mean I'm going to be 100% right and we're going to get to there and reverse? No, it doesn't mean that, but that's my current assessment. I'm monitoring the market, seeing what the market's going to do, how price behaves at these levels is important. How does price behave there? Right, I've got another level up further. We might even get up to 2400, as I mentioned in my video yesterday. So I look at these levels and I monitor price and see how's price behaving at those levels. I don't just automatically enter based on my assessment on what I think the market's going to do. I want to see some level of confirmation. Looking at this trade, right, I was looking for longs and waiting for this manipulation. But did I enter as soon as I got that? No, the market could have continued to go down. The market could have attacked these lows. I waited for the consolidation. I waited for the market to move up. And then I took my entry and I quickly took my exit. Right? 100 pips. I'm happy with that. Closed out the trade. I could be done for the day. Right? All my trades are journaled. You can see them on YouTube. They're all journaled here. This is a very satisfactory trade. One single trade. Okay? In a matter of a couple of hours. I'm happy with that. I don't have to trade anything else for today. Don't even have to trade next week if I don't want to. Okay? So very important you don't have to trade, and very important any levels we have as part of our analysis. We don't just jump in. We still need to monitor how prices are behaving at those levels. I hope you found this video insightful. I will now speak with you in a future video.